So here's a lesson of the day. Did you know that business sales have changed in the past 20 years? Yeah, I've been doing this a long time. So one of the most common things that I see that is a big change, and you better know this like the back of your hand if you are a small business owner. And by the way, before I go any further, I need you to do two things. I need you to do what everybody else says when they get videos going. Hit that like, subscribe. But I'm also going to say, do another thing. I want you to share this video because I need this to get out to people that it'll help. And this video is going to be about helping people that have an issue. They're not going to tell anybody. Two reasons. One, because they don't want people to know. Two, they probably don't want old to know either. Okay, here we go. I started the video. Do you know how business sales have changed in the past 20 years? Well, this is the biggest item that has happened. Cash sale. I cannot stress this enough. Actually, how many times can I say long? Unless we're talking about watching Ben-Hur or the Ten Commandments or something like that. Those are long movies. But I mean, it's a long time ago that you would sell businesses based on the cash they were making. Now let me re-emphasize this. We're going to say unreported cash. Now, before my feed goes crazy, every business owner that I have ever dealt with in the past 23 years now, they all understand the concept of running a business and not reporting all your sales. It was almost like 20 years ago, this was pretty common. You'd see nightclubs doing about $2 million in sales off the books from door charges and stuff like that, all collected in 10s, 20s, and 50s. Maybe the door handler got a quick 100 for the get to the front of the line, but you get the idea. Now, here's the issue. Number one, that's illegal. I'm not going to give attorney or legal or accounting advice, but everybody knows if you don't report your income, it's probably not on the best side of the law, right? So putting that to the side, this is the other issue that it'll hurt you on, your valuation. Whew. Man, this is a tough one because I've owned multiple types of businesses. I get why people have done it, although I've never personally done it. I do understand why people don't report their sales. This is really common in like restaurants and bars, nightclubs, cash businesses. I see it a lot. But here's the problem. Eventually, this is going to be a wake-up call. Eventually, you're going to get older. Eventually, you're going to want to retire. Eventually, you might want to do something else because you're tired of doing old Kiss tunes on karaoke till 3 in the morning. Wait a second. I went on a tangent there. Let's look at my dog one more time. Man, this dog is crazy. But anyways, I lost my train of thought. What was I speaking about? This is what happens when you get old. Mind starts to go, oh yeah. So cash businesses, they're gone. They are gone. Or I should say unreported cash businesses. So when you're looking to sell, whether it's retirement, move on, or you just want to cash out, the very first thing you're going to want to know is how much is the business worth. Now, businesses can only be valued if there's financing involved from a bank, which is about 9 out of 10 businesses that sell are going to have some type of financing, whether it's SBA or seller held. If it's an SBA loan, listen to me closely. If you don't get anything else out of this video, get this. SBA loans or government-backed loans can only lend on what you report in income, specifically on your tax return. Although, depending on the part of the year, you're going to use a P&L for the year to date and stuff like that. And in some cases, let's say you close a business in January, July, or basically before your due date, they'll use the previous year P&L, but they'll require a transcript for your tax return to validate. But it can only be on what's reported. So I'm going to speak specifically of Florida because each state's a little bit different, but the concept is still the same. And here it is. Let's say you made $1 million in unreported income. You got a viable business. No doubt about that. So what you're really trying to shift out is about sales tax, which is about, let's say, 7 to 8%, depending on your state. Some may be low 6, some might be a little higher, but 8%. You know what? Let's use lucky 7. Concept is still going to be the same. So you're going to save about $70,000 on a million bucks. It's a lot of money, don't get me wrong. But here's the problem. That's only 0.7 or 7% of what you unreported. Where it starts to be a problem when you're looking to exit. So that $1 million in cash doesn't count. Now, depending on your growth rate, a lot of other factors and stuff like that, even if you just have a super simple business, let's say you have a super simple diner, nothing flashy about it, it just makes money. That's it. Let's say it does about $2 million in sales a year, which a 24-hour diner, that's probably in the ballpark, 2 to 2.5 million. Got one that's really rocking, you might cross 3. Those are kind of rare, but about 2 to 2.5 million is probably what you're gonna do top line gross. That is the gross part. But if you're not reporting that, your multiple, which will be on, there's a lot of different ways to value a business, but most on Main Street businesses, which are like 10 million and below, are going to be factored on two items. One is called the discretionary earnings, or also known as the seller's discretionary earnings. They're going to apply a multiple to that to find out it's called the MPSP, it's the most probable sale price, and that'll factor in local comp sales. There's income approach, assets approach, cost capitalization. There's a lot of different things, but in most Main Street transactions, that's what it is. So I'm trying not to get too complex on this, just to illustrate the point. Here it is. That diner we're talking about, let's just keep it simple. Say it's doing 2 million top line, and on your returns, or what you're supposed to be doing, you should be reporting all the earnings and paying tax and sales tax on all of it. Let's say you're just a bandit, like, go to a Wild West or something like that. And you say, you know what, I'm going to save I'm going to save my 70,000 because I'm just smarter and I'm a gangster and I can do what blah, 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 blah. All right. So you were really smart. You outsmarted the system, right? You got yourself 70 grand, but you weren't able to report that million. Man, this one hurts because I've seen it happen so many times. Because you didn't report that, your business now can only be valued on the reported income you did. Once again, keeping it super simple, you didn't report half your numbers. So you got $1 million on $1 million you reported, $1 million you didn't. That extra $1 million on restaurant multiples, bar multiples, nightclub multiples, once again, it's all subjective. It will go back and forth. But that range is going to be anywhere from 2 to about 4.5 times numbers. I'll do a whole nother video on why certain things get a higher multiple versus others. But in a nutshell, you got to know, let's just go right in the middle, say a 3 multiple. If you're not reporting that $1 million, you know what you just gave up for that $70,000? Can somebody in the comments say, drum roll, Dave? Drum roll, business broker Dave. Here it is. $1 million times a 3 multiple is what? See, you went to math class too. That's $3 million that you just lit up in smoke because you wanted to be Al Capone. Now, I understand everybody's reasoning is different. I understand there's a lot of people out there that says, you know what? I don't like this or that about these politicians, and it's my money I work on. I get all that. I really, really do. I get it. That's not what this video is about. This video is about getting you the most money you can by not only properly selling your business, but taking the steps prior, whether it's a year, 2, 10 years before, and doing the steps that will maximize your exit. You cannot believe the heartbreak or basically the loss of blood in the face that happens when I'm explaining this to somebody that's worked forever and they are pounding the table on how their business is worth much, much more, usually double to triple, because they have that quote unquote side cash. Although there are going to be some instances where somebody will take the risk. This goes back into what I was saying is, as a long-standing old man business broker that been doing this over 2 decades. Buyers are more savvy now, man. Not that you would ever really want to pull the wool over any buyer, but I'm telling you, even buyers that have no idea what they're doing, they can outsource their due diligence. The very first thing that these due diligence firms do, or any savvy buyers, they're going to send you a list of items that they want for due diligence. Guess what's on that list? Everyone's different, but every single one, 100%, every single one will ask for the past 3 years of tax returns. At the bare minimum, that's what they use as their starting point. So, not saying that it's impossible to sell a business, but what do you look like to the buyer? Well, you say, hey, I have this, but I've been cheating forever. Well, if you've been cheating forever, how do we even know what your actually reporter was right? Yeah, this is probably going to hit a nerve for a lot of people. And once again, that's not my intent. My intent is kind of give you a heads up and an alert to say, hey, take the time to do things right, because you might be tripping over pennies on your way to get dollars. Those few $1,000 that you're going to save on your sales tax doesn't even compare to the millions, multi-millions in some cases, that you're going to leave on the table when you look to exit. Going a little further, a little bit more advanced when any type of financing is used, SBA and stuff like that, which there's a lot of different programs, but that's the most popular one, SBA 7A. They're going to look specifically on your tax returns. Now, with that said keep in mind, you can have a tax return that shows a loss, but they're legitimate add-backs, whether it be owner's salary or buying excess inventory, reinvesting, capital expenditures into the business that are non-reoccurring, depreciation. That's a whole nother video. But the fact is banks allow and they welcome savvy business owners that maximize their tax strategies, but they will put a hard stop, a hard break on anyone that's not reporting. It shows type of character and says, hey, you know what? If they're doing this, what's to say that they're going to, support this loan? And by federal regulations, they can't loan on it anyways. But that's just that part. And then let's say you're not using SBA and maybe you have a larger business, maybe like not super large, because this doesn't happen as much the higher you go into like M&A and stuff like that. Let's say you're kind of like mid-level. Let's say you have an HVAC or a landscaping or a roofing. Actually, that's a good one. A roofing company, because there's been so many. Most of those claims will come in through insurance claims and stuff like that. But you might have did a deal where you say, you know what, I'm gonna fix this part of the roof, and this is your price for this, and this is your price for cash. Oh, you might have got that cash job. Don't even include it in your revenues when you look to sell it. Ain't gonna happen. But as you get higher, you're gonna be dealing with private equity groups, and in those lightning in a bottle, you get a strategic. When you do those, I promise you, they know what they're doing, and they're gonna tell you everything you need to do. So, moral of the video: report your income so you can maximize your exit. Don't give up pennies for multi-millions of dollars. I'll leave some links in the comments. If you want some more consulting, just use one of the links below, and I can help you out. This is Business Broker Dave, Global Business.